So now that we've got 3 years worth of performance data for our income value portfolios, and we're starting to make more people aware of what we've done, I thought I'd give a bit more information about the structure of the portfolio and how we're managing it. So as I've said before, one of the objectives is to have low volatility. And how we've accomplished that is not only in the types of securities that we're buying, which are income generating securities, but also by diversifying the portfolio and having a maximum of 5% in any particular position and with no averaging up or averaging down, something that we would do in our capital accumulation, that part of our business. So we have a broadly diverse portfolio, and therefore it's not very volatile. Structurally, think of the portfolio as about half in corporate debt and about half in dividend-paying securities. We do have the ability to hedge where we think that there's a risk that we want to remove from any particular position. And we have a great deal of experience in hedging, 30-some odd years of doing different types of arbitrage, which I think makes us skilled in the tools that are available to protect a particular position and protect a portfolio. So what an investor could expect from this portfolio, of course, is stability of capital, preservation of capital, and that's also because we're taking a value-focused approach, as we do in all of our business. Of course, income, both interest income and dividend income, and we're not ignoring the possibility of generating capital growth. In fact, over the 3-year period, a great part of the return has come through capital growth, and that's simply by applying a value approach again, buying bonds that are discounted for one reason or another, buying dividend-paying stocks at a particular time when their price is low relative to their value. And we've closed out probably 30 different transactions over the 3-year period, and I think it's fair to say about 75 to 80% of those have been profitable, some of them very, very profitable. And we continue to find new opportunities, and we don't push the portfolio. So as I mentioned in our previous video, that return was accomplished with about half of the money sitting in a high yield savings account. That's not a macro decision that we've made, but rather a function of the opportunities. Sometimes we have more, sometimes we have fewer opportunities. Recently, we seem to have found more opportunities, and so I would think we're about 70% invested right now. But as I say that, I realize that one of our bonds has just matured, and we're very close to taking a profit on a second position. So there's an ongoing process of trying to find new positions to replace those that have been profitably exited. So we'll probably talk on these videos a fair bit about this particular part of our business over the next months. It is important right now. There's a big audience out there of people looking for income, and we have a very kind of clever and now successful and proven successful approach to doing so.